Good morning, grade 12s. Today we're going to continue our lessons on inventories. The topic for today's lesson is ethics, internal control, and problem solving, obviously referring to inventories in the context of your inventory. Okay, so in terms of internal control, what is important is that we do count the stock regularly and randomly and check it against the stock records. Only if we do this will we be able to pick up any kind of theft. Right, we need to physically, obviously we record when our purchases are delivered, it is recorded on our system, but we always need to make sure that we do a physical count to make sure that what we have on our system actually matches what we physically have in our storerooms. So a physical stock count has to happen regularly and randomly. All right, if our employees are the thieves that are stealing our stuff, obviously we can't tell them, okay, we're checking on these dates, whatever. A random check every now and then. Okay, then it's also important that we order smaller quantities but more frequently. We mentioned this in a previous lesson as well. If we order large quantities and the stuff is sitting there on the floor, in our cabinets, in our storeroom, it is tempting. The workers, the employees might see that the stock is not moving. There's plenty of stock in the warehouses and they might be tempted to steal some for their own personal use. Whereas if we buy smaller quantities, we buy small quantities, but we buy more regularly, so we don't have a large amount of stock lying around there on the premises. Then also in order to improve our internal control, we can improve the physical security. Okay, for example, controls at the entrance, okay, like machines that beep when they move through the electronic machines. We can have a security guard there that is checking the receipt of the customer as he leaves to make sure that everything that he has in the bags is actually paid for. Okay, check against the receipt what people have bought. We can make use of the electronic tags. That is the thing that screams when you move through the exit, and the tag wasn't removed. We can have security cameras which we can monitor to see. We can have somebody watching all the stock all the time. Okay, on the security cameras, see when people come in and out of the storeroom, who's taking what, who's removing what. Okay, so we can pick up theft like that. Then we can also take out insurance. This is very, very important. When we insure our stock against theft or fire or any natural disasters. Okay, if there's a fire and we lose stock, then the insurance will pay out. If it burns down, if there's water damage in the storeroom, or the electricity goes off and we lose a whole bunch of stuff that is in cold storage, then at least we have insurance that will cover a part of the loss that we will suffer. Then also important division of duties. Okay, in the case of trading stock, the division of duties refers to the fact that the person receiving the stock and making the payment for the stock, and then the person who does the stock keeping in the storeroom, it should be done by two different people to minimize the risk of fraud happening. So the person receiving the stock and making the payment for the stock, and then they give it over to the person there at the warehouse that is actually supposed to monitor the stock in the warehouse. It should be different people. And then also we also have to check if our records match with the payments for the stock. So where stock was received and paid for, we physically need to count, right? This is how much we've ordered. We've ordered and paid for 100 units. When it arrives, we need to count. Is there 100 units? We've paid for 100. We must make sure that we did receive 100 units. So we have to check if our records actually match up with the payments. What we received is what we paid for. Okay, then in terms of ethics, the very important thing is that it is unethical to change the stock valuation method without having permission from SARS. There is a tax implication because the different stock valuation methods, we calculate the value of our stock differently. Okay, the value of the stock on hand is calculated differently, and in some cases it will, like with certain inventory, the stock valuation methods, it will increase the value of our stock without us having more stock. It can increase the value of our stock or decrease the value of our stock. We will do activities in class where I'm going to illustrate this to you. Okay, once we are back at school, we're going to look and see if we use the weighted average method on the same information, we use the FIFO method, what effect does it have on the value of our closing stock? And that has tax implications. So once we've decided on the stock valuation method, we need to stick with that. We can only change if we get permission from SARS because it has tax implications. Okay, then our stock prices should be fair. We cannot overcharge our customers by selling goods of inferior quality. If we're selling good quality products, the price can match. Okay, so it can be a slightly higher price. But if we are selling goods of inferior quality, we cannot still sell that at a very high price. Whatever price we decide on, it must be fair towards our consumers. Yes, we need to make a profit, but it must still be affordable for the consumers as well. Okay, it's unethical to charge higher prices and sell goods of an inferior quality. It is unethical. Okay, then very important, expired goods should be removed from the shelf or the storeroom. It is also unethical to try and sell expired goods to consumers at the same price. What a lot of people do, a lot of businesses do, is they take the stuff that is expiring soon. Okay, I know Checkers does this, for example. They've got a table where they put the stuff that is, for example, expiring tomorrow, and they mark it down. They mark it down more than 50%, or it's a lot cheaper than normal, to encourage people to buy them. Because today it hasn't expired yet, it's expiring tomorrow. So to get something, because if we try and sell it tomorrow, we can't. That is unethical. So if we sell it today at a discounted price, at least we still get money for our stock, because if we leave it for tomorrow, we are not going to get anything. All right, so we cannot sell expired goods to people at whatever the price is going to be. Okay, so it's a strategy that some businesses use to reduce the price quite significantly, kind of the day or 2 days before expiry date, to try and encourage. And a lot of people buy that because it's a lot cheaper. All right, and it hasn't expired. It will still be fine today, but we can't sell it tomorrow. Okay, and then very also important is that we need to dispose of any spoiled goods responsibly. So stuff that has expired already, we can't just go and dump that somewhere in the environment. Whatever we decide to get rid of it, the method that we use to get rid of it, it is important that we do not do damage to the environment. So we have to dispose of those spoiled goods responsibly, so as to avoid damaging the environment in the process. And it's the ethical thing to do. It's unethical to go and dump our stuff in a river, for example, if we know that it's going to be polluting the river and have an adverse effect on the environment. Okay, when it comes to problem-solving questions, and we're going to work through some examples just now, but what is very important is that when we do problem-solving, always in your answer, you have to support your answer with figures, and you're going to be required to provide possible solutions to be implemented. So you're going to be asked, you're going to be given figures, you'll see in the examples just now, to look at the figures, look at the information that is provided, and identify the problems. Okay, they're going to say identify one problem, identify two problems, okay, with this business. Provide figures to support your answers. Okay, you can't just say, okay, this is a problem. You have to say, well, identify the problem, provide figures to explain your answer, okay, to substantiate the answer, and then they're going to ask you to provide possible solutions. So if this is the problem, how can this business solve this problem? So the first example that we're going to look at is the one of Benji. Okay, so Benji Mobile Traders has 2 branches in 2 different towns, both of them selling laptops. Ben, the owner, is concerned about the performance of each branch and has decided to investigate. Information for the 2 branches for the March 2019 is provided. So what you have to do is you have to identify one problem in relation to each branch. You have to quote the relevant figures to support your answer, and in each case offer Ben advice on how to solve the problem. This is the information that they give you. Okay, first of all, there's general information. Okay, normal time for this business. Okay, normal time is from Mondays to Fridays from 8:30 to 4:30. Okay, 8:30 to 16:30. So that's a total of 160 hours in a month. Okay, overtime is if they work after 4:30 in the afternoons up to 6:30, and that is for 40 hours per month. And then on Saturdays, there's an additional 12 hours. Okay, so overtime, if they work on a Saturday from 9:30 to 12:30, that would give them overtime, and the total for the month would be 12 hours. In total, the amount of hours is going to be 52. All right, overtime. Now, this is the total for overtime. Maximum overtime is 52 hours. Okay, then they also tell us that overtime salary or wages is 1.5 times the normal rate. This is law. Okay, according to Basic Conditions of Employment Act, anybody working overtime must do so on a voluntary basis, and then they must be paid 1.5 times their normal rate. So if they get 60 Rand an hour normally, then they have to get 1.5 times that when they work overtime. Okay, this is the information, the additional information that they provide to us. If we compare the two branches, in terms of stock on hand on the 1st of March, both branches have the same. Okay, both of these branches have got 80 units on hand on the 1st of March. Their selling prices are exactly the same. Okay, both of them sells the units at 5,800 Rand per unit. Okay, in terms of their units sold, MC Quartz, they've sold 58 units, whereas Quartz only sold 47. The units returned by the customers, Quartz, there was only 3 units returned by dissatisfied customers, but for Quartz, there was 8. Okay, so less sales, but more returns. In terms of their sales, credit sales and cash sales, in terms of the credit sales for Quartz, they sold to the value of 191,400, where Quartz money received was only 104,400 credit sales. Cash received and deposited for Quartz was 120,000, for Quartz 121,800. Hours worked, normal work hours for Quartz was 156, whereas for Quartz it was 120. Overtime hours for Quartz 10 hours, but Quartz 50 hours. This is another potential problem. And the rent expense per month for both of these branches are the same. All right. So again, yeah, this can be a first problem. For Quartz, they sold less units, but they had more returns. All right. This is a potential problem. They sold fewer units. Okay, so their sales were less, but yet they had more than double the amount of returns that Quartz had. And then if you look at their working hours, there's also a potential problem there. All right, if you look at Quartz, they work a lot less normal hours than Quartz, but then look at their overtime hours. All right, and remember, overtime, the wages and salaries is 1.5 times what it is during normal time. So this is increasing our expenses if we make the people work overtime. Okay, so the problem here is that for Quartz, the normal hours is only 75% of what it should be. Okay, remember on the previous slide, we said the total normal hours for a week or for the month is 160. They're only working 120 normal hours. So if we work out the percentage, it's 75%. They're only working 75% of the normal hours. But if you look at their overtime, the maximum overtime for the month was 52 hours on the previous slide. They are working 50 out of 52 of these overtime hours. So 90%, 96% of the overtime that they could possibly be working, they are working overtime. All right, so too little normal time. Obviously, they sit and do nothing during their normal working hours so that they can work overtime because then their wages and salaries is higher. All right, so these are two potential problems that we can identify. Okay. Same information, I just want to show you this quickly. Okay, if we look at the credit sales and the cash received and deposited from cash sales, we need to make sure that there's no money missing. Okay, if we look at Quartz, this one, okay, their sales, they've sold 58 units at a price of 5,800. Okay, that is their sales. And then their returns, there was 3 units that was returned. Okay, obviously, we gave them the money back, 5,800. So if we take their sales minus the returns, we expected that the income should be 319,000. But if we look at the actual income, their credit sales, yeah, okay, the credit sales was 191,400. The cash deposited from their cash sales was 120,000. That gives me only 311,400. This is what it should be. All right, we should have 319,000, but we only have deposited this much. All right, so obviously there's missing cash. All right, there's 7,600. What we should have minus what we actually have, there's 7,600 Rand missing. All right, somebody took that money and they did not deposit this in the business's bank account. If we do the same for Quartz, okay, they sold 47 units at 5,800. Okay, so that is their sales, right? Minus their returns, 8 units was returned at 5,800. Okay, so that is the returns. If we take their sales minus their returns, we expect them to have 226,200 that the income from their sales. So if we do the comparison and we see their credit sales was 104,400, their cash sales was 121,800. If we add the two together, it gives us what we should have. All right. So for Quote, there's no missing cash. All right. They have deposited all their money. There's no fraud happening there. But with Quartz, we've got a problem. Somebody is stealing the money. There's missing cash. All right. So now that we've looked at it, okay, the way that you're going to present your answer in an exam is for Quartz. Remember, we had to identify one problem for each branch. Okay. So for Quartz, we picked up that there's missing cash. All right. There was only 120,000 Rand deposited instead of 127,600 in terms of our cash sales. All right. So 7,600 Rand is missing. All right. That's missing cash, money that was supposed to be deposited that is not deposited. Okay. So we don't know where that money went. It is a problem. All right. And then also another problem that we can see out of their total sales of 319,000, the percentage of their sales that is on credit, 60% of their total sales is happening on credit. So obviously if we sell on credit, we're not getting the money straight away, and that could potentially cause a cash flow problem. All right. So we look at the percentage of their credit sales. A large percentage, more than half of their sales is on credit, which means they're not going to get the money straight away, which can cause cash flow problems if they don't have cash in their bank. Okay? Potentially, it can cause a cash flow problem. All right. What is our advice? Now, remember always your advice has to solve the problem. Okay? It has to match. So if we are saying that there's cash missing, we are going to suggest that they do division of duties. The person that is receiving the cash can't be the same person that is going to deposit the cash. Okay? If it's two different people, the person depositing the cash is going to pick up that, I'm sorry, but there's no match. Some of the cash is missing. Okay? Then we can know where to go and look. And then in terms of our credit sales, obviously we need to reduce credit sales because we need more cash sales. How can we do this? Okay, for example, by allowing discounts if people buy on cash. Okay, we don't give a discount if people buy on credit, but by offering a cash discount, more people will be encouraged to rather buy cash instead of buying on credit. All right, for Quote branch, the problems that we've identified, first of all, they've sold less units. If we compare it with the Quartz branch, they've sold less units, but they've had more returns. All right, what can we do to fix this? We can set sales targets. Okay, we give the salespeople a target, and we might offer a reward. Okay, for the people that has the most sales, we need to encourage sales. We need to review our returns policy. Maybe it's just too easy for people to return the stuff. Okay, to avoid the returns, we can check the stock for defective items when we receive them. Okay, when we've purchased and it gets delivered, we need to check for defective items. We can't be selling defective items. Obviously, it's going to get returned. So we need to check them before we sell them, when we receive them, to make sure that there's no defective items. If we do pick up defective items, we send them back to our supplier. Then we return them. We don't sell them to our customers and wait for them to return it for us. And then to encourage sales, we can also calculate the commission on the net sales. Net sales, remember, is your sales minus your returns. All right, so they can't earn commission if the people bring back the stuff. If you are working on commission, obviously the more stuff you sell, the higher your commission is, so the higher your income is going to be. So doing commission, obviously it's going to encourage our sales. Okay, so by introducing a commission system as payment, that will encourage our sales, but the commission must be paid on net sales. So only the stuff that is sold and is not returned. There's no commission earned on the returns. The second problem is that we calculated that they only worked 75% of the normal time, but then they work 90%, 96% of the overtime. As I mentioned earlier, this is going to increase the wages and salaries because the more overtime you work, every overtime hour, you have to pay them 1.5 times their normal salary. So this is going to terribly inflate your wage and salaries, a huge expense, obviously reducing the profit of the business. Okay, so what must we do? We monitor the performance of workers during normal time. Why are they not working during normal time? They need to work during normal time, and only the work that doesn't get finished, we're going to allow them to work overtime. We need to minimize the overtime hours by making sure that people are actually working during their normal hours so that the work can get done during normal time and it eliminates the need to work overtime. So what would the structure of your problem-solving questions be? First of all, you're going to be provided with information relating to C traders, a business. They're going to tell you that they sell product X, Y, and Z, or that they own two branches, branch A and B. All right, so you're going to be given information for a business and then information for the different products that they sell or different branches that they own. Then they're going to tell you that the owner is concerned that the figures provided reflect poor internal control and decision making. And then you have to identify one problem for each of the products. So if they provide you with different products, they're going to ask you to look for one problem relating to each product. Or if they give you the different branches, identify one problem relating to each branch. You have to quote figures relating to the problem to prove that there is a problem. And then you're going to have to give advice on how to solve that problem. Okay, now what I'm going to go through with you now is just different kinds of problems, things that you can look for. All right, so you're going to look for different things. Okay, the type of the problem will be in this first column. So you're going to look, for example, at their closing stock. All right, if their closing stock, there's only a few items. All right, so their closing stock, in other words, it's low. Okay, there's hardly any items left at the end of the year, right? That can be a problem. Okay, then you're going to say that the stock is too low. There's too little stock on hand at the end of the year, right? And you're going to give figures to prove your answer. Okay, obviously figures from the information that they gave you. And then a possible solution or advice that you can provide is so that they must, in the business, order sufficient stock to avoid losing customers. Okay, because now what's going to happen if your stock levels are really low at the end of the year, and for example, the customers comes in and they want to buy something and you are out of stock because you didn't order enough stock. That customer is going to go to a different business, they're going to buy from a different business, and they're never going to come back to you because you didn't have stock when they were looking for it. All right, so the solution is that you must always order sufficient stock. All right, when you must make sure that there's enough stock in your shop so that when customers come, the stuff that they're looking for is there. All right, on the other hand, exactly the opposite problem, if you have a high number of items. Okay, so your closing stock is very high. That means obviously either you overstocked or your stuff is not selling. All right, now this can be a problem because it can be stolen. All right, or it can be damaged. All right, so if you have too much stock on hand, in previous lessons we've discussed this, it might be tempting for your employees to steal some of it. If they see the stuff is there in the shop or in the storeroom and it is not moving, it is not getting sold, they might be tempted to just take some for themselves. Plus, if there's a fire, if there's a burst water pipe and there's water damage, the stock that you have, there's a lot of stock in your warehouse that is then going to get damaged. All right, and even though you are insured, there's always a loss. Okay? Insurance is never going to pay out what you lose. You still lose. Even if you have insurance, there is still a loss that is going to be made. All right, so in terms of the closing stock, you look, how much items do they have, units do they have on hand? Is it too little? Is it too much? All right, it's one of the things that you can look for. Then you look at the sales compared to the deposits. Okay, in the previous example that we looked at, there was missing cash. That is what you're looking for here. Okay, how much sales were there? How much cash was deposited? Okay, so if your sales figures exceeds the cash deposits, then there's missing money. Okay, that is a big problem, and that was in one of the examples that we did. Okay, so the advice that you can provide is that they can check the cash regularly. All right, so check the cash on a regular basis before making daily deposits. So don't wait until the end of the day to check the cash and then go and deposit it. Regularly, tea time, lunchtime, second tea, you're counting all the money all the time to make sure that it corresponds with the sales for the day, so that you can pick up who was working that shift. Okay, during whose shift did that cash go missing, so you can figure out who took it. And then we spoke about also the division of the duties. Okay, with the person receiving the money can't be the person depositing the money. So the person working the cash register cannot be the person that takes the cash and goes and deposits it at the bank. All right, because then there's no control. All right, one person is receiving the cash. The person depositing the money will check that all the cash is there, that it matches. They check the cash that it corresponds with the sales, count the money, and then goes and deposits the money. So that if there's money missing, they know, okay, it's from this cash register. Who could have potentially taken this money? Okay, the next problem that you can look for is the profit markup. Okay, it also can either be too high or it can be too low. All right, you're looking for, if the stock markup is too high, you can probably see that because your stock levels are high. All right, if your end of the year, the stock on hand, when you check at the end of the year, is very high, that means the stuff is not selling. All right, and one of the reasons that it might not be selling is that your profit markup is too high. Okay, the solution to the problem is, if it's too high, they need to reduce it to a percentage, obviously, that is not lower than what others are charging. But if other businesses that are selling substitutes, they are selling at a profit markup of 50% and you are selling at 150% markup, obviously your profit markup is too high. You need to bring that down, but you're not going to take it down less than 50%. If your competitors have a 50% markup, you're going to make yours 50% as well. All right, but if your markup is too high, the stuff will not get stolen, your stock will not get sold. And the only way is to reduce your profit markup to decrease the prices. And at a lower price, obviously more people will be willing to buy. Your profit markup can also be too low, all right, which means that your business is not going to be very profitable. Okay, so the profits that you're going to be making is going to be disappointing, all right? Then you can increase your markup, but again, by a reasonable percentage. Again, not higher than what others are charging. Okay, you need to increase it. It needs to be reasonable so the products are still affordable. Otherwise, you're going to create this opposite problem, okay, that your stock is not going to get sold. But you need to increase it so that you can make a reasonable profit as well, but not higher than what your competitors are charging. Okay, here you're going to look at, obviously, if we're saying here that you have to take it lower or higher compared to what others are charging, the focus here is you have to compare it to the other branches or to other businesses. All right, this is in comparison. You're always going to make a comparison. Just by looking at yours, it's difficult to say. But when you compare it to another person's, then you can say it's too high or it is too low. Okay, another potential problem can be the selling price per unit. Again, it can either be too high or it can be too low, but we are comparing it to other competitors. Okay, we can't look at it in isolation. If it's too high, we need to reduce it. If it's too low, we need to increase it. Okay, you'll see the guideline there. We increase or reduce the selling price between 200 and 300 Rand a unit, or 25 and 40% a unit. Okay, but when it's too high, we need to take it down. Too low, we need to increase it compared to other competitors. What are the others doing? We have to do a similar thing. Okay, the next problem can be the number or the percentage of sales. Obviously, if you have a low percentage of sales, that's going to lead to stockpiling. All right, you've bought stock and the stock is not moving. All right, so you're not getting the stuff sold. That means that your sales is too low. All right, and obviously here you're going to compare your purchases and your sales. How much did you buy? How much of what you bought are you getting sold? The idea is to sell it. Otherwise, you're not going to make money. Okay, so here you're looking at how much stock you bought and how much stock you have sold. All right, how can you monitor this? What is the solution? Okay, if you do regular stock counts, you can see that if there's stock that you are purchasing that is moving very slowly, okay, obviously you don't just sell one thing. Okay, in a grocery store, for example, they will sell multiple items, but you need to identify what stock is moving, what stock is not. All right, so if you're buying yogurt to sell yogurt, and you'll see that the strawberry flavor is moving, but the banana flavor is not moving. Okay, so obviously then people are not demanding, they're not buying the banana flavor because it's disgusting. So then you're going to buy less. So for every 100 units of strawberry yogurt that you're going to buy, you might buy 10 units of banana yogurt. All right. You can see if the stuff is not moving, the people are not interested in buying it. So you shouldn't buy as much of that to stock, okay, to increase your stock. Then also, if your sales is low, we can introduce commission. Okay, I did refer to this earlier as well. If your sales personnel, the people that are selling, if they are earning money for every unit that they sell, they're going to be motivated to sell as much units as possible, because the more they sell, the more income they're going to earn. All right, commission is always earned on your sales. So every sale you make, you're going to get a percentage commission of that sale. So in order to encourage them in sales, don't give them a flat salary, because then there's no motivation. You tell them you get a basic salary of whatever, and then in addition to your basic salary, for every unit that you sell, you get 10% commission. So they're going to want to sell as much as possible to increase their commission and increase their income. All right. And the last possible solution is introduce a differently branded item. Okay, so if the stuff that you have is not selling, purchase something else. Okay, don't stock that item anymore. Scrap that from your product line. Get something else to sell. Okay, get a different branded item. So if in other words the Parmalat yogurt is not selling, try clover. All right, people might not like the Parmalat, but they might like the clover. Try a different brand. Okay, then there can be missing stock. We've also done this when we did the different stock valuation systems. We did the calculation as to how you calculate the missing stock. So what you're going to look for here is the number of units stolen. You're going to do a calculation here to determine if there are units missing. All right, and then obviously the assumption is going to be that it was stolen. All right, what can you do to prevent this? Again, regular counts of stock. Okay, check. Don't leave it for once a year. Every now and then, randomly, regularly, you do a physical count. And then increase your physical security. All right, security cameras in your store, locked cabinets for products like watches and jewelry and things, lock them up so that people can't take them. Security checks at the entrance. We have a security guard standing there, checking people's purchases against their receipts or the invoices to make sure that they've paid for everything. You can have the security tags that is attached to the items, that if it goes through security, that machine makes a big noise. Okay, but we need to obviously solve the problem by preventing people from actually stealing the stuff. All these things is going to help us to prevent the theft from happening. The next possible problem is a stock turnover rate. Okay, so the problem is if you've got a low stock turnover. Okay, that means that you're not getting the stock moved. The stock is not moving. People are not buying your stock. And probably because it is unpopular. The customers don't like what you are selling. It is not according to their tastes and preferences. It is something that they're not really interested in. All right. So what you need to do is you need to increase your stock turnover by, for example, improving your advertising strategies. All right. Or reduce your prices. Okay, this can be a strategy as well to reduce your prices. And then in future, obviously, don't stock it. If people are not interested in buying it, stop stocking this item and replace it with something else. Okay, the stock holding period. Okay, this goes hand in hand with this one. Okay, these two always must go together. Okay, your stock holding period shows you how long the stock stays in your shop before it gets sold. Okay, so the problem is going to be if you've got a high stock holding period, okay, which means that the stuff is in your shop for a long, long time before it actually is bought. So again, same thing, because this is the same problem basically, your solution is going to be the same. Okay, you're going to improve your marketing, your advertising. Okay, you need to advertise, you need to encourage people to buy the product. Okay, or as I mentioned earlier, decrease the price, have a special something to encourage people to actually buy the stuff quicker. Okay, the next problem that we're going to look at is the number of orders versus sales. Okay, now the number of orders here, I'm referring to the people that are ordering from us. Okay, so people order from us, and if we compare that with the sales, the problem is that our orders are exceeding the sales. So people are ordering, but then they're not actually buying. Okay, so the problem is, and you're going to obviously compare the orders. Okay, that's the first thing that you're going to look for, a figure for orders, how much was the orders in total, and then you're going to compare it to the sales. Okay, this is how many items was ordered, but only this amount was sold. All right, so the solution there, first one is we can follow up on orders in order to reach all the targeted sales. Okay, when an order is placed, we don't just leave it. We follow up on the order to make sure that it does result in a sale. And then very important, customers that place an order should pay a deposit. Because if we allow them to order and then they don't pay a deposit, it's easy for them to cancel the order. We must make them, when they place an order, we can say you have to pay a 20% deposit or a 50% deposit, and this deposit is non-refundable. So if they do cancel their order, they are not going to get their deposit back. So they are less likely now to cancel their order because they've already paid a percentage of the stuff. They're rather going to go through with the order. And the last solution is to order as per the customer's specifications. Right, so you order exactly what they are asking for. They will give you the specifications, and that is exactly what you order. No more, no less. You're ordering only what they have actually specified. Okay, then if we look at the returns by the customers, earlier in that example of quote and quotes, we also referred to the returns. Okay, the problem is if there's high returns. Low returns is not a problem, that's great. Okay, but if there's a high returns by the customers, you will obviously provide the figure. How many things was returned? If we sold X amount and X amount was returned. Okay, the high amount of what we have sold was returned to us. Right, a possible solution is when we order the stuff, our stock, when we order the stock, we should ensure that we order good quality products so that when we sell it, we are reducing the returns. If we are selling a good quality product, the chances of people returning it is going to be slim. All right. If we are selling inferior goods, obviously people are not going to be happy and they're going to return it. All right. So it starts with the stuff that we order. When we order from our supplier, we have to check the quality of the goods to make sure that it is correct. Then also avoid cheaper goods of inferior quality. It doesn't help to purchase from a supplier that is cheap, but the quality of his goods is inferior. When we sell it to our customers, they're going to return it because the quality is inferior. They're not happy with the quality of the stuff that we have sold them. All right. If our existing supplier is the problem and he keeps supplying us with goods of inferior quality, cancel him. Okay, there's other suppliers there. Find a new supplier that is going to give us quality stock but at a reasonable price. All right. Then same thing, we order as per the customer specifications. We order when the customers order from us. We order from our supplier what the customer has ordered according to their specifications, not more, not less. And then lastly, we need to check the quality before accepting the stock when it gets delivered. Okay, we're not just going to check, okay, well, there's 1, 2, 3, 4, 5, 6 boxes, check. No, it's fine. We need to check for the quality as well. We have to check that the correct quality has been received, quantity and quality has been received. So we check, we've ordered 5 boxes, did we receive 5 boxes? But then we open the boxes and we make sure that the quality of the stock that we have received is acceptable. If it's not, we're not even going to put it on our shelves. We send it back to our supplier and we insist that he provides us with better quality goods. The next problem can be your advertising expenses. Okay, the amount that we pay for advertising. Okay, and here what we're going to compare is you're going to look at your advertising expense. Okay, so if we are paying a lot of money for advertising, but our sales figures is low. All right, so we are paying an advertising company, a marketing company to do advertising for us, but the advertising campaign is not successful at all. All right, advertising is supposed to create an increase in sales, but if our sales figures are not increasing, it's disappointing, our turnover is really low, then obviously our advertising is not very effective. All right, so then we need to find lower cost advertising methods, okay, methods that we can use to advertise. We need to change, for example, the method that we are using to advertise, but doing it at a lower cost. All right, so we can't pay a lot of money and not have any results. So we change our advertising strategy and we find somebody that is willing to do it at a lower cost. If we need to switch advertising companies, marketing companies, we do that. All right, but as long as we can decrease the costs. Okay, same with rent expense. Okay, if we are going to compare this to other stores or other branches, what are we paying for rent? What are other people paying for rent? If we are paying a high amount of rent, low rent is not a problem. A high rent is a problem because it increases our expenses and it reduces our profit. So if we are paying an exorbitant amount for rent, What is our solution? Look for a cheaper business premises. Move the business into another office building or another shopping center, or whatever the case may be, where the rent might be cheaper. The more we pay for rent, the lower our profits are going to be. All right. So if we are paying much more than what others are paying, we need to obviously find for a different premises that where the rent is going to be less for us. Okay, then another problem is your cash sales compared to the credit sales. We had that in the previous example as well. Obviously, if you are selling a high amount of credit, if you're selling a high amount on cash, it is not a problem because you sell the stock, you earn your cash immediately, and you can use that cash to replenish your stock levels. But if you're selling on credit, you are selling your stock now, and you're only receiving the money for that stock at the end of the month, 30 days normally. All right. So if you have to wait for 30 days before you get the cash in, that means that you can't replenish your stock levels and you might run out of stock unless obviously you have money in the bank. All right. But the more you sell on credit, the bigger the chance that you're going to end up with cash flow problems. You might not have the cash to buy more stock, to replenish your stock for the next customers that is wanting to buy. Okay. So how do we decrease our credit sales? As I mentioned in that other example, we increase our cash sales by allowing a cash discount. Those people that are buying cash, they get to receive a discount. The people that is paying on credit, buying on credit, they're going to pay a higher price. They don't get the discount. So people are more likely to buy cash then because they want to receive the discount. Okay, now the next thing that we're going to focus on is the calculations that you can expect in the exams. So what kind of calculations are they going to expect of you that obviously relates to inventory? Okay, we're specifically looking at inventory. Okay, the first one, which we have calculated in previous lessons when we looked at the different stock valuation systems, is the number of items stolen. Okay, you need to calculate the number of items stolen. So then you're going to start with your opening stock plus your purchases minus the returns minus the sales minus donations if there was any, minus drawings if there was any, and then minus your closing stock. And then if there is a number here, if it's 0, then there's no items missing. But whatever you are left with here, the number, the units that you are left with there, that is the items that are missing. And yeah, we kind of think then that it was stolen. All right. So your opening stock plus your purchases gives you how much you have available to sell. Okay. Minus the returns then, because we don't have that anymore. We've returned it to the supplier. Minus the sales, because we've sold that to people. It's no longer here. Minus donations, if we've donated any, or drawings if the owner took any. And then minus the closing stock is the stock on hand at the end of the year, which we haven't sold. We know it's still there. And then whatever you are left with is the number of items that are stolen. Okay, the number of items on hand. Okay, there again, you're going to start with the opening stock plus the purchases. And then remember, we add carriage on purchases and the customs duties as well. Then we subtract the returns, the sales, the donations, the drawings, and then the closing stock. All right, that is going to give us the items on hand. The value of the stock on hand, remember each different system, valuation system is going to be different. Okay, we have covered this in previous lessons. So then you're either going to use the first in, first out, or your specific identification, or your weighted average method. Each method, this calculation is going to be different. Okay, the cost of sales, remember we can use either the periodic system or the perpetual inventory system. It is calculated differently in each system. You will use the appropriate calculation depending on whether the business is using a periodic or a perpetual inventory system. Okay, for gross profit, the normal one, okay, the one that you are familiar with is we're going to take sales minus cost of sales. But we can also take the closing stock plus sales minus the opening stock plus the purchases plus the carriage plus customs duties. Okay, so you calculate the closing stock plus the sales. You calculate opening stock plus purchases plus carriage plus customs duties. And then you take the number in green there minus the number in red. That is also going to give you gross profit. Okay, the markup achieved, you've been doing this really since grade 9. You're going to take your gross profit over the cost of sales times 100. That is going to give you your markup percentage. Okay, the unit price. Okay, unit price, remember this is the calculation that we use to calculate the value of your closing stock when we use the weighted average method. All right, so only for the weighted average method are you going to look for the unit price. All right, because remember you are basically working out kind of an average price for all the different items that you are selling. And there you're going to take your opening stock at the beginning of your financial period plus the purchases minus the returns, because we don't have that anymore, plus the carriage plus the customs duties in rand. Okay, remember at the top there we have all the values in monetary terms. All right, so in rand amounts, and we divide this by units. Okay, how many units did we have opening stock plus the purchases minus the returns? Rands over units. We've covered this in a previous lesson. Okay, and then the last calculation, calculate how long in days it is expected to sell the closing stock, or what is your stock holding period. Okay, it's the same thing kind of, all right? So to calculate this, you're going to take your average inventory over the cost of sales. Okay, average inventory, remember beginning of the year plus end of the year divided by the cost of sales, okay? Then times by 365 because it is in days. Remember, they can ask you in days or in months. If it's in months, obviously you're going to multiply there by 12. All right. Or you're going to take the units stock on hand divided by the units that you've actually sold times 365 if it's days or 12 if it's months. And then the stock holding period, you're going to take your closing stock over the opening stock plus purchases minus returns minus the closing stock times 365 days. Obviously, your calculation method that you choose will depend on the information that they actually provide. You will choose your formula according to the information that you are given. Okay, so now it's time to practice this interpretation and problem identification and solution provision. So you're going to do for me task 10.17, that is on page 384, as well as task 10.18, and that is on page 385.